we had this house that my wife loved and wanted to buy. I've mentioned it before on videos, but I'll give the new updated part of the story.
Okay.
I thought we'd get it for basically a third less than what they were asking for it. And I was right.
Discount.
I was right. But I had a letter from a bank saying that we were pre-approved. Another family came in and bought it for cash.
Oh.
So I got it down to 1.6. It started at 2.2, and they bought it for 1.5, which is what I was going for. Mm-hmm. It just sold recently for 2.55.
Wow.
Money can be complicated. Let a nerd help you. We're here to demystify the complex nature of money by getting you answers from financial nerds and whiz kids. Welcome to Ask the Money Nerds, a weekly segment of the Wealth Labs podcast where we answer your most pressing money questions. If you have access to cash or your own system for personal banking, what are the top strategies to maximize this, what I would call cash flow banking system? With the massive amount of money added to the economy, sitting around and setting your money aside for the hopes of it growing for the next 30 years in funds, well, it's just not the best option. It's kind of dangerous. So what are the massive opportunities now and in the future? Stolba, let's get into this.
Okay, we're going to dive into Al's question. No chit-chat at the beginning this time, huh?
I guess I mean, who knows?
Sometimes we go on our little tangents and then 6 minutes into the podcast or video, we actually get to the question and the content. But today we're going straight to it.
Okay.
Here we go. Al's question. He says, thank you for all your financial intelligence. I've learned a lot from your videos, your books, and your online program.
Question. Who speaks with their hands more, me or you?
Definitely you.
Yeah?
You think so?
Okay.
Well, am I using my hands a lot right now?
I'm just wondering. I just very like letting people into whatever the spark of thought is at any moment.
Random thought. Okay. Al lives in Canada and he has connected with the cash flow banking experts through the Wealth Factory Network. And he says, now I understand cash flow banking and the system, but I know I have to create a strategy to use the system more efficiently. If you can offer the top 3 strategies, what would they be?
Okay.
So top 3 strategies.
So cash flow banking, quickly, for people that haven't ever seen this channel before or listened to this podcast.
What is CFB?
It's simply a system where you're overfunding cash value life insurance so that it ends up, beating a savings account 400 to 800% better, having protection from liability and bankruptcy, access to cash before 59 and a half, tax advantages along the way. And so essentially you have your own funding mechanism when there's good investments or things, you've got the cash there.
Yeah. So cash flow banking is an alternative to a 401k, to a Roth IRA, and some of those other
to getting
accounts.
a loan at a bank it's kind of a whole system. So the first thing you could do is just let the money ride. You can just let it sit there. I've been doing that for the last several years now, just because I haven't liked, what's happening in the economy and I hadn't seen the right types of deals. And I've been just reinvesting back into my business. So that's one option. Mm-hmm. The things I've used my cash value for, I bought a business in 2014 with my cash value. I bought a lot of real estate from, I guess that was the year 2002 through 2007. I bought a lot of real estate with my cash value. I bought the very property that we're sitting in right here with my cash value because it was a highly desired property and I was able to move quicker than everybody else. So I got it, and I got it at a slight discount. Didn't get really that much, although I think this has gone up a lot in value in the last couple of years.
Well, it brings a lot of value to your life.
I love it, and I'm not going to sell it. So I've used it for that. I use it for remnant rate. Remnant rate was putting New York Times and Wall Street Journal ads out for my first book, Killing Sacred Cows, putting a TV studio with it. So I've used it to invest in things that are aligned with my business and investments that make sense for me. So you have to figure out like what kind of investments you're going to do, and you kind of got to create what I would call a hurdle rate. What rate of return would those investments have to do to consider touching your cash value? Mm-hmm. If it's not going to do 10%, I don't want to touch my cash value. Now, my cash value has never done 10%. Mm-hmm. I think the best policy I have is just over 6%. Some are way down in the 4% range of what they're actually getting after expenses, but without taxes. Mm-hmm. So if I'm going to pull that out, typically it's going to be taxable. So I got to value the time that it takes for that transaction and the risk that comes along with it. So for me, if it's not going to get me 10%, I just don't want to mess with it. I like the stability and the security and having it there. And my main process with it is I want to make money on the buy. I want to be able to pull cash out of this and get something at a deep discount. Now, unfortunately, before I had my system set up or I tapped it out with other things, we had this house that my wife loved and wanted to buy. I've mentioned it before on videos, but I'll give the new updated part of the story.
Okay.
I thought we'd get it for basically a third less than what they were asking for it. And I was right.
Discount.
I was right. But I had a letter from a bank saying that we were pre-approved. Another family came in and bought it for cash.
Oh.
So I got it down to 1.6. It started at 2.2, and they bought it for 1.5, which is what I was going for. Mm-hmm. It just sold recently for 2.55.
Wow.
So that was a make money on the buy almost, because they had access to cash. So that's, if you could buy something at cash flows from day one, or you can buy a business that's in distress, or a property that's the seller's in distress and needs cash quickly, being able to access that cash quickly, I think, is one of the major advantages of having this.
Yeah.
Right. Mm-hmm. And I've used it for hard money lending, where I'd use my cash value to secure something, charge someone a bunch until they got bank financing, and then I'd get paid back at a pretty good interest rate. So
if someone has a large sum of money in their policy, and they also have some high interest credit card debt or a student loan that they want to get rid of, cost of money on some of these credit cards is 17 to 24%.
We've seen 29% in one of the Ask the Millionaires questions.
I think so. I think that's the highest that I've seen. So would it be wise to take money out of the cash flow banking policy, pay off that debt? Because that would be greater than a 10% return.
100%. Yep. Okay. You nailed it. So you could just kind of let it, right? Look, I actually used my cash value once to pay off an American Express. So we had done this major campaign for killing sacred cows, and I put it on the credit card, and basically it took longer to pay off than I expected with the promotion. And so I had just paid it off with my cash value, so I didn't have to pay the interest rate on the American Express. Yeah. Because it was like $70,000 or something like that. So yeah, that's a great example. Paying off loans, perfect. I wouldn't touch it unless it's safe and secure and cash flowing. Otherwise, I just kind of let it ride. And you got to figure out your investor DNA. What kind of investments are going to be right for you? Is it business acquisition? Is it real estate? Is it creating intellectual property-based business that's for yourself? Is it getting the right financial team around you so you can save on tax? There's all sorts of different investments that are out there, but I'm not a fan of just handing my money over and being like, cool, this is a fund. Like, I don't care if it's a real estate fund or a stock fund or a bond fund or I just don't do funds, because I am too far removed from the outcomes. And there's too many moving pieces and too many investments in that to understand how it's working. And if there's turnover in the management, then I might not even have the investment I initially thought I had. So I like to buy assets that I have the asset and that I'm willing to manage it. So for me, it's really intellectual property and potentially business acquisition. That's really where I would use my cash.
Okay.
Want to continue the path to be a better investor? Make sure that you're not losing money and taking too much risk? Well, click here and learn about strengths vesting.